Good day traders. In today's video we'll be discussing the difference between retracement and reversal in the market and how you can actually identify them very early before they occur. All of those in this very video. If you're new to the channel, ensure you subscribe to the channel, hit that like button and turn on the notification bell. If you've not traded on Binance before, check in the description below and you see a link there. Pass through my link, register on Binance, and you have 20% commission off trading fee. Not only that, if you want to enroll into our trading academy, you want to get trained by the academy and be a professional trader. Not only that, you have access to our VIP signal group. Also check in the description below, you will see a WhatsApp contact line and contact us directly. Now let's get started. Reversal. Now reversal means a change in price direction in a specified period of time. Let's say price was moving up and all of a sudden price now change. Okay, price was moving right up and all the way price turned back near down and come down. That is a reversal. It's a change that occur in the overall market direction. So let's say, for example, if you look at this very level, there was a change. Market was moving from down here upward, and then there was an overall change here. Market comes down. Now from here as well, there was another change. Market turned and come back up to this very level. So you can, if you go back, if you go back and bring up the other chart, you discover that after this very point, market come down again. So that means that market moves in circles. So there is a point which the market will get to and it will totally reverse. So there is a difference between retracement and reversal. So reversal is a total change in the market direction at that specified period of time, just like I just demonstrated now. Now I'm going to go to the Binance Exchange and give you more practical example of how to spot reversal and retracement and the difference between these two guys. Now retracement is a temporary change that occur in a particular trending market. It's a temporary change that occur in the particular trending market. Either the market is going up or the market is going down, either way. Okay, so now let's say, for example, you say this market was going right down. This market was going right down. This was a point of reversal down to this point. This was another point of reversal before the market starts going up from this very area. Now if you look at this point, market go down, come back up. So this is a retracement. It comes down again to this point, go back up. This very move is a retracement. It come back down up to this very point, to this very level. So this move is a retracement. Why is it a retracement? It's a retracement of the initial move. This guy is a retracement of this initial move. Why this is a retracement of this move. So therefore, you see, retracement is just a temporary change. The market was going right down. So we see a little bit of temporary change. Market move up. It comes down again. A temporary change. Market move up again. So retracement is just a temporary change that occur in a specific market trend. So in this case, market was going right down. And then we see as market goes down, that's how the market moves. And this behavior is as a result of buyers and sellers buying at different points or the other. So that's the difference between retracement and reversal. Now, you look at another example again on an uptrending market. Let's say market was going up. This is a point of reversal. This is where the market totally turned. And this is another point of reversal as well. The market is going down. So if you look at this very point, market moved from here to this point, it retraced. It moved from here to this point, it retraced. Moved from this point to this point, it retraced right down. Moved from this point to here and retrace again. Now, each retracement and impulses, the market was going up, making higher highs. You see, with the first high, second high, third high, fourth high, then here we see the market will not make a high again. So, but the main explanation here is that retracement and reversal, two different things altogether. So what you're looking at in terms of retracement is a temporary change. Just in this case, market changed a little bit before it moved back up. It changed again, come back down to retrace the retracement of this very move. It retrace and go back up and meets this point of reversal, then the market comes down. Now let me explain a little bit further using my chart. So let's say, for example, we have this point. You see, when the market moved from, let's say this was a point retracement, this is a point of reversal, market go down, come up, go up, market come down again. We see another point here, market goes up. We see another point here, market come down. We see another one, market goes up. You see this market. Now if you define this very market, now this was a point where we can say, okay, if the market was going up, it hit this point of reversal and is now coming back down. That's why market was going up from here to this point. It hit reversal point, just like in this case, and then it started going down. Now this was an impulsive move. We call this long move an impulsive move. Why this is a retracement of the impulsive move. It's just like when you run a race and then you rest for a while. So markets have to run and then rest. It run again, rest. So the resting stage, you can call retracement the resting stage of the impulsive move. So these are retracement. This is a retracement. This is another retracement. This is another retracement. So market will always retrace every impulsive move. Now, bear in mind, because most traders don't know that there is a point where a market will reach and it must retrace, that it have to retrace. And always bear in mind when trading that anytime you are trading or making trades, you always want to enter a trade at the beginning of an impulsive move. Very important. Where is the beginning of an impulsive move? A beginning of an impulsive move is when the retracement have ended, and there are technique and strategy for you to apply to know the very point or the very time where retracement have actually ended, so that you will now join the impulsive move. Because we don't want to buy at this point or sell at this, you want to sell at this point, sorry, you want to sell at this point and the market goes up before it comes down. You want to sell here. In the case of shorting the market, if you're trading futures and margin trading, okay, you want to sell the market here, you want to sell the market here, and you want to sell the market here in the case of a downtrend. Now, the same thing applies when you are talking about an uptrending market. In the other way around, if market was, going up, market goes up, market come down again. Let me make this a little bit bigger. Market goes up, come back down, goes up, come back up. So in this case, we have impulsive move, retracement. Now, another word for retracement is also called pullback or pullback, or you can also call it correction. So we call impulsive move and corrective move. Market move again, impulsive move and corrective move. Market move again, impulsive move and corrective move. So each of these correction are called retracement or pullback. So from now henceforth, I believe you know what retracement is. Now, when it comes to reversal are a point where the market completely turn around. Like there was a complete change in the direction of the market. You see here, market was coming down and there is a complete change in BTC right now and the market is riding up. Now, if you go to other if you go to other time or other past charts, if you go to past charts of BTC, see this was a point of reversal as well. At this very point of reversal, market comes down, go up again, and then come down. This was another point where the market reversed as well, and then market start riding up. So you must identify point of reversal should be completely different from point at which you sell the markets, retrace. So I believe you've understand and know the difference between retracement and reversal in the market. Now, how will you know when retracements have ended, and how will you know when a point will hold as a point of reversal in the market as well? Now, all of those in my next video. So check out the video on the channel there. And so let's say this was an uptrending market. So this market was going right up. This market was going right up. This market was going up. Okay, now the market was going up. It starts moving sporadically from this point. It retreats. It moves again, creates another new high. It retreats, which was a bullish close before this very particular candle comes in. Now after then we see the market create a new high, it retreats again. Market create a new high, it retreats. So these are retracements in the market, and you must actually know how to identify this retracement. And when a retracement have ended, like this point, it has ended before the impulsive move continue. At this point, it has ended as well before the move continue. At this point, this was the initial move, and then at this point, retracement ends while the impulsive move continue. So these are how you identify retracement from reversal in the markets. Like in this case as well, you see market move down, retrace, move down, retrace, move down, and then it forms a double bottom. After the double bottom, you see the market right up before it crash back down. We have a whole lot of example here that you can take through yourself and then acquaint yourself with the difference between retracement and reversal, because the first thing you have to know is the difference between retracement and reversal before you talk of how to spot retracement when it has ended and how to identify whether a point will hold as a reversal or not. So thank you very much guys for watching this very video. I will see you in the next video. Ensure you check the channel for how to identify retracement when it has ended and how to spot reversal early in the market. Thank you very much for watching. Ensure you subscribe to the channel and hit that like button.